Okay, very good morning to everyone. It is Monday the 22nd of January, so hope you all had a good weekend and you're feeling fresh for the week ahead. So, usual kind of plan, I'm going to talk through a couple of the news items, a couple of things to get through, updates politically in both the US, obviously in Germany, a few things on the week ahead because we've got the Bank of Japan, we've got the ECB, US GDP, quite a lot of things to get through. So my intention here is for me to talk about the news for 10-15 minutes, then I'll hand you over to Sam and he'll have a look at some of the setups that we're looking at both for today and then any key levels for the week ahead technically. So just having a look at the charts this morning, and you probably would have read the news. We are now into the third day of a US government shutdown, but looking at the charts, fairly calm markets because this isn't really the first time that this has happened. Of course, it has happened back in 2013. If I remember rightly, it was 16 days we had a government shutdown at that point in time. We go back to, I think it was the mid-90s twice, 95, 96. We had also a shutdown. So it's not the most surprising thing. And also as well, the immediate consequence is relatively small. We're going to have a look at this shutdown situation in a bit more detail in the next kind of step forwards. But the point being, an overall summary is that the market's kind of taken it in its stride at the moment. Here's a statistic for you. 18 government shutdowns over the past 42 years. They've lasted between 1 to 21 days, and the median S&P return has been 0 during those shutdowns. The highest has been 3.1%, so that was actually the last occasion we had the shutdown in 2013. The equity market in terms of the S&P actually rallied 3.1% over that 16-day period. If you were going for a negative performance, you'd have to go all the way back to the late 70s, essentially. So the market remains calm for the moment while these talks are ongoing, and as I say, I'll come back and revisit that in a second, because one of the things I do want to have a look at was the euro. And although we're trading relatively flat, minor positive just around pivot, it has seen some price action, as in the initial move at the reopening of trade last night was a gap up. And a lot of this has been based upon the latest in the German political situation, because Angela Merkel has moved a little bit closer to forming a fresh coalition with the SPD on Sunday. 56.4% of the SPD delegates voted in favour of pursuing formal talks with Merkel's party. So, as you can see though, the move has not been sustained. We actually dipped lower during Asia-Pac trade, only to rise again back to pivot as Europe's come in and kind of digested the news, pretty much back to where we were, the predominant part of that opening trade in the futures market. Looking forward though, the reason why the market hasn't moved substantially is because this is just basically the SPD agreeing as a political party that they're willing to go into formal talks now with the CDU-CSU. So looking at the timeline ahead, this is basically a good graphic that I saw, and this is outlining the situation. So as of today, the 22nd of January, Merkel's party and the SPD can begin detailed policy talks. Going forward then, February, Monday, I like the way Bloomberg have put the 12th, but this is the 12th Monday of February. We're looking at the coalition deal by start of German carnival season. So they're looking to formulate a deal over discussions basically that are going to take place over the next 2.5-3 weeks or so. And obviously they want to get things underway before carnival season. I know that sounds a little bit ridiculous, but anyone who's been to Germany, Carnival or Carnival is a pretty serious business and everything just shuts down. So then you're looking to March, where by mid-March the SPD will hold a postal ballot of its membership on the final deal, which would take about 3 weeks to organise, distribute and get the final result. So actually, in reality as a timeline, you're not looking until the Easter weekend when a new government and chancellor will be sworn in. So you're kind of talking about the back end of March going into the beginning of April before then you get this concrete answer as to the formation, the actual policies of Merkel becoming Chancellor, which is very much expected, but then the kind of the details of the political party of the Grand Coalition again. So hence the reason why you've had a relatively muted impact in the market. Other things then, going back to the shutdown in the US, because that's kind of the headline story, if you like, and this is what people are looking at. So the shutdown extends into a third day as Senate fails to end the impasse. So Senate Majority Leader Mitch McConnell, this is as we go forward now, has scheduled a vote at noon today. So that's noon local time. So you're kind of looking around 5 p.m. post-European cash equity close today. This could end the shutdown. So McConnell, the Kentucky Republican, and Democrat leader Chuck Schumer of New York have been meeting late yesterday, and they're basically looking to try and piece together a short-term deal that would basically have the Senate vote today to advance a plan that would fund the government through to February the 8th. So again, another short-term agreement so they can continue to talk. One of the interesting things here is that obviously Davos, which is the World Economic Forum, kicks off tomorrow. So this basically, you've got all the heads of state. You have central bankers appear, influential people, definitely market related, will all be featuring from Tuesday all the way up till Friday, where the headline keynote speech on Friday is going to be delivered by Donald Trump. So it will be interesting to see, I guess, if you were trying to make a bit of a political point, if you were the Democrats, then what better to have Trump deliver a key speech where his government is in shutdown. And it had been, if we get to that point for approaching 10 days, it could be quite a significant blow to him in terms of his PR and his administration. So be interesting to see whether or not they purposefully look to push this out towards the end of the week to put a bit of pressure on the president. The other thing as well, Vass made a good point this morning when we were in conversation. He was saying about essentially with a government shutdown, it typically is most negative to the most popular party at the time, which is the Republicans or Trump, but more so the GOP. And actually, given the fact that it means that non-essential staff, and by that I mean hospitals, things like that, continue to function, but non-essential staff are kind of told not to come to work. And so obviously the longer this goes on, the more destabilizing it is for public support for that current administration. So it would be in your interest, if you were the opposing political party, to string this out as long as possible, because really it's the opposition which are feeling the heat to up the ante. And obviously there's midterm elections coming towards the back end of the year, and this is a good point at the anniversary of 1 year of Trump being in power to make a political stand. A couple of things here to have a look at. We just talked about the S&P has a fairly benign reaction to this type of information. Just a quick chart here, which is the S&P 500's 12-month return after a government shutdown has begun. And as you can see, nearly every single one going back to the early 80s, so really it was 79 when we had a negative print, has turned around a pretty good year in the end. So it tends to have a fairly minimal impact in the longer term in that sense. For any energy traders, just a quick heads up, I did see this morning. Commodity markets should trade normally today, even though key regulators, including the CFTC, will be operating with skeleton crews due to the US government shutdown. So this is what I mean by non-essential government personnel. They basically get put on temporary unpaid leave. And this is really key, unpaid. So this is when it has that political sentiment that can build up into being quite negative to the current administration if this is a prolonged shutdown. Because then obviously those guys who are living on the breadline, so to speak, get impacted substantially every day that passes. But things like your Department of Energy crude oil inventory numbers is going to be a bit of a moving goalpost here to whether they get released or when, I should say, because the compilation of that information might well have been not able to be conducted due to the fact that they are deemed as non-essential stuff. So that's the government shutdown situation. A few other things, and again I want to kind of whip through this information because I want to hand you over to Sam and get things all wrapped up from a technical point of view as well. So you've got the ECB coming up, and it's an interesting week for central bank decisions. You've got two big ones. You've got Bank of Japan coming up first, where we're not really expecting a great deal. Some people looking at the potential the Bank of Japan could fine-tune its yield curve control by raising the 10-year JGB yield target. You might remember, I guess it was 2 weeks ago, Tuesday, I think it was, when you had a bit of a move in yields moving higher because there were some subtle changes in the longer dated maturities of which the size of purchases the central bank were making. This is part of what they call their Rinban operations. So some people talking about potentially we could hear some details around that from the Bank of Japan. I'd say that's probably to a lesser extent though, that you would hear anything too definitive, because they're still very much in a more accommodative stance at the moment. But focusing on the ECB, and this will be the main kind of event for a lot of European traders this coming on Thursday, and although a lot of people are looking at March to be the big one, certainly we've had quite a mixture of commentary coming out from sources, ECB minutes, and down to individual ECB speakers that have had a variety of different kind of policy views, because it kind of was initiated by hawkish ECB minutes. That was followed by some hawkish comments. However, as the euro-dollar pair got up to multi-year highs and towards the 124 handle, you then started getting dovish ECB sources. Then you got some dovish ECB comments, almost then kind of reading between the lines, the ECB just looking to control what is a fairly optimistic market about European economic prospects going forward. And what the ECB don't want is a euro that continues to power higher in the context of what has been a persistently weaker dollar, with the Dixie having traded at a 3-year low more recently. So what are we looking out for? Well, the big focus is on any potential change to forward guidance. Deutsche Bank, the European economists expect Draghi to prepare the ground for changes to forward guidance in the press conference by differentiating policy expectations from the policy reaction function within forward guidance. We're going to talk a lot about this in a lot more detail as we get further into the week. But they also expect the recent euro appreciation to be a talking point. And again, the specific words that are used in order to express the current feeling that the ECB has to the euro-dollar pair trading around the 123 handle will be very influential as to how close we are towards them kind of upping the ante to want to verbally intervene and to manage that currency. So it's going to be quite an interesting event. The press conference obviously will be key, because we're not looking for any definitive real change to or explicit change to the statements quite as yet. And this is why I've brought up this chart. This is just to show you a Bloomberg survey conducted essentially last week. And as you can see, the blue comparative to the yellow bars on the chart, economists have shifted their expectations for when the ECB will announce the end of QE. So before, we were looking at really September of this year as when the ECB were going to start talking that up. However, given some of the hawkish comments that we've had in the last week or two, expectations now being bumped a quarter forward to June. So this summer is when the ECB will start talking about that eventual end to the program. Okay. One other thing. This is just if it's of interest, because it's certainly not a market mover. This is a lot more long-term. But there was quite an interesting article in the FT that I tweeted from the Amplify account. And it talks about what the EU will look like after Brexit. And there's quite a few interesting graphics looking at kind of positives and negatives. And I think one of the interesting things of this is to do with the fact that as much as we talk up the negativity economically for the UK of what Brexit will mean for our economy, let's not forget that Europe are also going to feel a hefty hit on the back of if we were to actually it all gets facilitated and we are removed from the EU. And there's a series of good graphics here which will help kind of kind of just build up your knowledge of the situation from a European point of view, and a couple of headlines here. The EU will lose 16% of its GDP when the UK leaves the Union, for example. You're looking at the UK's share of EU GDP is greater than its share of population, so it's kind of up there with Germany and France. Without the UK, the EU's economy is smaller than that of the US, and that's the first time really that would have happened in several years, because the UK helps bump it as a euro area and a bloc above that of America, and this is important from a kind of trade relationship point of view, and lots of other interesting things to have a read if you have time. Okay, quick look at the calendar then, and I'll hand you over to Sam. First of all, today is very quiet. There's not a great deal going on from a data point of view. There really is nothing, and there's no major scheduled central bankers. The central bankers are really going to come thick and fast when Davos kicks off tomorrow, and that, as I said, goes through all week from Tuesday through Friday. A few other things for today though. I had to congratulate Vas this morning because Greece has been upgraded at S&P. Long-term foreign currency debt has been upgraded for the first time in 2 years, and they're now rated B with a positive outlook, which means most likely or not they'll get upgraded again in the foreseeable future. Now this is...
It's from Cyprus.
So this... Will's just shouting out about Cyprus and Greece, but let's not go down that route because we could be here a long time. One thing to point out though, talking about timelines with Greece, there are within Europe, I know we're kind of dominated by Brexit talks, but actually there are European talks about Greece that are happening, I believe, today. And the fact that they've received or been the recipient of a sovereign upgrade is important because they're obviously going through a period of still being reliant on economic aid and assistance from their European partners, and this is very important. The rating agency was saying that Greece's growth and fiscal outlook has improved alongside a labour market recovery and a period of relative policy certainty. So things are improving on that side. And then the other thing that is to be aware of from today, actually from a UK perspective, although it's not reflected on this calendar, is the House of Lords are having their hearing today in reference to Theresa May's Brexit legislation, which passed through the lower house last week. So just something to keep in mind if you're looking at the sterling currency. Looking at the week ahead though, this kind of summarises things a lot more neatly of where the main kind of market moving events are. So going into Tuesday, or well, overnight, we'll get the Bank of Japan interest rate decision. Tomorrow, then you've got the ZEW Economic Sentiment Index, which can be quite interesting as a soft piece of data forward-looking for what analysts are expecting over the next 6-month period. You've got Davos kicking off, but also one thing to keep in mind, particularly if you're looking at the loonie, the CAD, is the 6th round of NAFTA talks also gets underway in Canada, in Montreal. That's starting from tomorrow, and this does have a meaningful impact if you're looking at things like the CAD or the peso. Earnings season is obviously fully underway. You've got Johnson & Johnson, Procter & Gamble, Verizon, for instance, on Tuesday. Other companies, GE, Ford, Wednesday. Intel, Caterpillar, Thursday. If you remember last earnings season, Caterpillar really did move the stock futures ahead of the cash equity open because they had a really strong, I think it was an outlook. Geographic regions were all very good, and we saw a meaningful move in the futures market because they're seen as a bellwether for kind of industrial demand, and so therefore net economic optimism, if you like, about growth conditions going forward. So a couple of influential earnings reports coming out. Otherwise, Wednesday you get the various European manufacturing PMIs. These are the flash readings, so they will be important. You've got the wage data coming out of the UK, which obviously is very much in vogue given the heightened inflationary conditions but lackluster wage, and so this will be very influential for the pound in the short term. Going into Thursday, then you've got the ECB rate decision, as I said, and we'll also get German IFO front running that in the morning. And then Friday you've got UK GDP, but you've also got US GDP for Q4, so this will also be of great interest to the market. And you've also got Mark Carney and BOJ's Kuroda speaking. So it's a pretty good week in terms of scheduled events, plenty to come. Also, you've got the ongoing impasse on Capitol Hill, so plenty to get your teeth stuck into from a fundamental point of view for the week ahead. All right, I'm going to hand you over to Sam. So have a good day, have a good week, and I'll see you guys later in the chat room. Thank you.
Good morning, everyone. Hope everyone had a good weekend. Just gonna lost the chart as usual. Just gonna run through some of the charts. We'll start off with the currencies. Let me just clear everything here. Start off with the pound, and as I mentioned to Jimmy in the chat, I definitely prefer at the moment to look to get long this currency pair. I feel the dollar's still got a bit of weakness left in, albeit, as I mentioned last week, you still have quite a few sort of analysts predicting a bit of a pullback for the dollar, but not happening just yet. Obviously, if we can push above this sort of high that we made following the gap over the weekend, opens the room to R1. So that's definitely something I'm looking at. Jimmy had that nice trend line on his chart, using the previous lows. You can see if I just sort of draw that up, roughly using those around there, you can see it's been respected pretty well. So if we do get a pullback round to that sort of region on the trend line, it would definitely interest me. At the same time, other places to be aware of. I'm just going to lower the time frame down here. Just below the pivot, you've also got the futures 139 handle. You've got the previous morning high, which I'll just circle here. If we can get a pullback here, you know, pivot, previous high of the morning, offers quite good support now to perhaps drive price higher through, well, what is the high of the day now, and then last week's highs or 2018 highs, depending which way you want to look at it. So I definitely, for now, prefer the upside to this pair, and I think we can get 140 this week. Looking at the euro, we obviously had that gap higher as well, only to fill that pretty quickly, and now we're just hovering around the pivot area. Been quite technically good this morning in that Friday evening sort of low has been today's low, so respecting quite well. If we can push on from the pivot here, or it might be the previous morning high, obviously got to be aware of the similar high around here, 123. For this currency pair, again, I do prefer the upside with the weaker dollar at the moment, but just bringing this out to show last week's sort of trading, you can see it has been quite choppy in this sort of consolidation period, and if anything, you know, definitely worth on a chart like this, just you obviously got those two highs here, just to get that on, just see if we are getting perhaps a bit squeezed into this here. I would have that on. Obviously only got the two touches either side, but if we start to see that being respected, it might be that leads to the break higher or lower, so we'll definitely have that on. Obviously got the JY6 Bank of Japan interest rate decision, as Ant mentioned, tomorrow. So for this currency pair today, perhaps not really favouring any direction. Yesterday or Friday's lows on S1, so technically looks quite good if you're perhaps looking for that range trade on a lower volume day, perhaps ranging into the meeting tomorrow, and R1 and Friday's high pretty close together. Other than that, it might take a significant break. Again, you can see how technically good this has been this morning, above Friday sort of afternoon, well, Friday morning's high, today's high. Little technical breakthrough there perhaps, but prefer the range trade, either the R1 or S1, but in truth I don't think we will get down to those points. Aussie dollar coming off that sort of multi-week high that we saw on Friday, when it's sort of early on Friday, and similar, I'd be expecting a sort of a range bound morning, so pivot doesn't look too bad, but it might be preferring to look to get in around the low of the day, or even safer, this sort of pullback area around here, with the S1 sort of giving you well, the two technical reasons, and also sort of following the sentiment of the weaker dollar, and a bit of Aussie dollar strength would be my favourite sort of trade for that pair. Equities, we had, well, I got out of my positions over, well, on Friday evening, just before the close. I did half expect, well, I did definitely expect actually Trump to sort of pull it out of the bag, if I'm being honest. but not really worth the risks in my view to sort of hold it. However, I still think equities will have an up week this week. In terms of S&P, I mean, we're a stone throw away from that high, but I'd only really be committing if we were to push on and have a technical push higher. I feel, you know, in this sort of uncertain time, especially the beginning of the week, it's better to let the sort of the noise take place before really sort of committing to get in. Hanging around that pivot now doesn't interest me. Also, the time of the day wouldn't really anyway. The Nasdaq, very similar to S&P in that it's not far from that high at all either. You know, very similar charts. I'll be looking at those two this morning throughout the day for that correlation. If we do get a push at a similar time, the Nasdaq pushing the all-time high, R1's obviously the obvious target from there. The Dow, which last week was, I mean, obviously it's still not far away from the high, but out of those three was perhaps struggling a bit more, and on the selling side was slightly more aggressive. Here I will be interested if we can get above this level. So what was the high this morning? I mean, to be safer, it would be Friday's high, push on there, and then I'd expect the all-time highs to come very soon. But I'd let this sort of noise sort of continue perhaps. S1 not a bad trade, but might be worth from a safety point of view to sort of wait until 5 p.m. when we perhaps know a bit more. The FTSE we talked about last week and finding support, and let's just go over that again on that 240 chart. You can see the back end of last week finding good support on what was the low on the 4th, and we since then have pushed higher quite nicely. Into today we've pushed on and filled that gap lower. If we can get a pullback towards what was this high of early morning, could be a good place to get into to go long, but I would be obviously looking at the pound for that correlation, pound strength, FTSE weakness, to see how that goes. Similar sort of trade idea in the fact that you'd be looking at the euro strength regarding the DAX. If we can get a pullback down towards the pivot area, something to consider. However, the pivot recently in the DAX, if it does spend a bit of time around there, can get quite choppy, so it might be better off looking at a bit lower down. But you've got this, I guess you can have this little trend line on here just to see if we have been respected, and you have got that this morning just through these lows here, although we are trending down at the moment. So we'll be looking at those markets, those correlations as and when we get to those levels. Gold, so you had that gap higher only to sort of come down quite sharply, and pivot has held quite well for now. I guess a short from the previous area of support early morning actually looks quite good around here, but again, looking at the correlations around that time might be better off, and the volume in gold at the moment perhaps not too high considering the morning and the data calendar really picking up into the end of the week, well, from tomorrow onwards. Quick look at oil before wrapping up. Put this on as 60. Mentioned it a few times last week that the buyers not as keen as previous months, and we are still in this consolidation phase, although perhaps starting to get squeezed in from the top end here. These highs of each day just getting lower each time. There's not necessarily a clear trend for the downside at the moment. Let's just see if we can get anything on here. It's something to be aware of, but not something to swear by. But I feel we could just be bottoming out or topping out, if you like, for the short term anyway. Key levels of support to be aware of that may give that indication. I think if we can break this sort of point, well, obviously the low from last week would be a start. If we can push down below the high of the morning of that 9th, I feel the doors could sort of open up a bit. So something to be aware of for oil. So a quick look here before we finish up. Euro stocks is coming down towards that pivot, so keep an eye here, I'd say, on the DAX and Euro stocks just to see if we can push on. The Dow just coming down to its lowest point of the morning as well. Currencies, have a quick look over just to see if we've had any more movement, which we haven't on the pound there, but I would be keeping an eye on that high or a pullback to the 139 handle just below the pivot. Is the sort of trade I've got my eyes on for the morning. We'll obviously be in the chat, so any questions about anything, feel free to either private message or just ask a question in the chat. If not, I'll catch you probably throughout the day, but also at midday we'll do a quick rundown as usual. So I hope you have a good day and speak to you soon.